morning. Thanks so much for tuning in. This is ET Now. You're watching Buy Now, Sell Now. I'm Alex Matthew, and joining me is Karanya Rao. We're going to take you through the next 1 hour. At the top of the show, though, we have to deal with the breaking news that we've just gotten. We were looking forward to this. The Supreme Court was ruling on several petitions that were made to extend the loan moratorium that the government provided on loans during the pandemic as a stopgap relief measure. Now, this ended in August, but because of the petitions that were made to the Supreme Court, there was a status quo on the recognition of some of those loans as non-performing assets. And what essentially the Supreme Court has said, it has ruled that it cannot interfere in economic policy that is decided by the government, and that is a huge positive for the banks. Remember, a lot of these banks have already made significant provisions for these non-performing assets, even if they haven't recognized them. So even if you see an uptick going forward, that may not have a massive bearing on their earnings. So take a look at the Nifty Bank. It was trading about 0.5% in the green at the start today, and that has made a significant up move within the last few minutes. Currently, if I look at the screen, it's trading with gains of over 1.7% or thereabouts. What else has the Supreme Court said in this situation? It said that it cannot ask Centre and the RBI to announce economic reliefs after losing on taxes due to the lockdown. They've also said that the waiver of complete interest is not possible because it affects depositors in banks as well. And it also said that it cannot say that the RBI and Centre did not address the issues of borrowers. The measures that were provided in the form of the moratorium were in fact towards providing relief to those borrowers. So we'll stick to that. We'll get expert opinions in just a bit. But for now, let's turn to a special information or a view that is being provided by our managing editor, Nikunj Dalmia. He's joining us now on the Microsoft Surface Hub, and he's going to tell you something quite interesting. Nikunj, what do you have for us today?
In last 1 year, we have perhaps seen all shades of human behavior. Same time last year, there was absolute panic. There was fear on Dalal Street. So how exactly big corporate groups have moved in last 1 year from a situation of extreme fall to a new record high? So today, what we will do is, we will point out two corporate groups where the market cap addition has been quite remarkable. And the first one, well, the Tata Group. The buzzword clearly is that Chandra has managed to reboot the Tata Group. He is looking at expanding, and he's looking at expanding without leveraging. But folks, the Mahindra Group also is perhaps indicating and is walking on the same path, which is they are expanding, they're checking on the return ratios, and they are getting rid of the dead wood. That explains that in last 1 year, while the aggregate market cap for the Tata Group is up 100%, the Mahindra Group is not far behind. But the big difference is that if you look at the 3-year average, the Mahindra Group of companies still have a long way to catch. So which are the stars here? We're looking at size, and the crown really belongs to TCS, which is now the biggest IT services company in the world. The stock in last 1 year, and 1 year is same time exactly a year ago, is up 85%. What a comeback it's been by TCS. But the dark horse really is, we talk about Tata Consumer, but from a market standpoint, in last 1 year, the stock has got massively re-rated because the business has changed. They are no longer a tea company. Now they are a food company, and food is one of the biggest growing category in India because of the change in Indians' wallet share. So this really is the dark horse. Within the Mahindra Group, we normally don't talk about it, but if one looks at the 3-year change for Mahindra and Mahindra and compare that with the 1-year change, the 1-year change has been nothing short of magnificent.
All All right, let's turn back once again to the big story of this hour, Supreme Court's verdict on loan moratorium interest waiver. Ruchi joins us with all the key highlights. Ruchi, fill us in.
In fact, this is the big story that we are focusing on at this point of time. The Supreme Court has said that in the loan moratorium case, the Apex Court cannot talk about a complete interest waiver. That is not possible. They've also rejected any sort of a moratorium extension as well. And they have said that it is not for the Supreme Court to decide if public policy could have been better. These are all details coming in. As my colleague Abhimanyu Sharma has been breaking all these details from the Apex Court. What is quite interesting at this point of time is that the Apex Court had said that, and this has been the long-standing position of the government as well as the RBI as well, they had said that they favor autonomy as far as economic decision-making is concerned. It's a big relief coming in for the banking sector from the Apex Court. The Apex Court has said that they will not interfere in providing any financial-related matters. They have said that they have dismissed any sort of plea seeking any further financial relief. Remember, the Supreme Court had asked the government to give a waiver of interest on interest, but the big worry was that if there was any sort of waiver on compound interest, then that would mean a big hit for the banking sector. Clearly, the Apex Court has cleared of that. This is in line with what the RBI as well as Finance Ministry already wanted. There's been no extension given on the moratorium period, but this is, of course, a very important development coming in. It means that finally banks, the RBI, the government can decide what needs to be the way forward. The Supreme Court has also said that during the COVID period, it's not just the businesses or various sectors that have borne the brunt of COVID-19. It is also the government. Look at their tax collections. Look at how they're suffering during these periods. The government's revenues have been dwindling during these periods, and which is why it is best left to the RBI, it is best left to the government to decide what should be the way forward. They can as such talk about the legalities of any sort of relief that the government and the RBI has provided, but they cannot speak on public policy or economic policies that have been made by them.
Absolutely, Ruchi. Do stay with us. We're staying with this story. Of course, this is the biggest story that we're tracking right now. We're joined live on the phone line by Tamal Bandopadhyay, who is author and senior journalist. Several of you have already heard of him. And we're also speaking to D.K. Mittal, who is the former banking secretary. I want to start with you, though, Tamal. Thanks so much for taking the time, first of all. What is your reading of what the Supreme Court has said already? Is it something that you had expected to happen? And also, what happens now that moratorium is not going to be extended, that relief that was expected is not going to be provided? How do banks' books now reflect that?
Well, to be honest, I'm pleasantly surprised. And I think this is, I have no business to say this, but I think this is the right thing which the Supreme Court has done, because judiciary has no business to be in the business of how the bank should be run and what needs to be done. It's better left to be the regulator. And this is what exactly Supreme Court has done. So if you see, there are a few parts of the entire case and the judgment. One is the loan waiver case. There's a string of PILs asking for loan waiver. And that actually got sorted out by IBA, that is Indian Banks Association, the prime lobby group of the bankers of the Indian banking system, and the government combined. They discussed, and they did chalk out a plan and did submit to Supreme Court what can be done, which is waiver of the compounded interest. So that was done, and Supreme Court, I think, it has accepted it, and it's not going beyond, not asking for more concession for banks. So it's definitely good for the banks. And other part, which was not actually part of the PIL, but it came in course of discussions at Supreme Court hearing, is the extension of the moratorium or the status quo. If you remember, Reserve Bank of India put moratorium for 6 months that ended in August. Now, Supreme Court had said the status quo continue. What does that mean? That even if a bank knows that a borrower has turned a defaulter, the borrower cannot be termed as defaulter, and it cannot be referred to credit bureau, and it cannot be reported to Reserve Bank of India. Now, so that has been continuing, and if you, all of us know that banks have been following a pro forma reporting, which means a parallel report, which is not reporting but a parallel structure where they are keeping a tab which loans are turning bad, who are not paying, servicing their loans, so on and so forth. All banks are doing this pro forma reporting for themselves. That's not for public domain. That's not for the regulator. Now, with the lifting of this move, I think the banks will now recognize what are the NPAs. Now, this is a good thing. So the suspense is over. And those who are taking advantage of the situation, they can't take advantage of the situation. They have to pay back. Now, there is one quibbling I had with this judgment is this: it should have come much earlier, because now today we are talking about 23rd, just about a week before the year end. Now, the banks this is not enough time for the banks to reach out to the customers, to cajole them or to put them pressure to get their money back. So I would expect, or I will not be surprised if Supreme Court judgment is followed up by some kind of RBI directive during the day probably, or today, tomorrow, giving banks some leeway, probably a month, probably a little more than that, you would need to classify them as NPA, but you give them some banks.
Okay. Tamal, request you to stay on with us. DK Mittal is also joining us right now to share his view. Of course, it comes in as a good news for the banks, but also for the centre, because if the Supreme Court were to consider waiving interest on all the loans for 6-month moratorium period, then the amount foregone would have been like about 6 lakh crores odd. So, Mr. Mittal, want to understand, I mean, a welcome move according to you as well?
Yes, Ruchi, yes, it is a very good move. And I think, as Tamal has said, it should have come much earlier. But nothing is late. So what has come out is very well. And what Supreme Court has observed, I think that is most important, that judges do not have expertise to look into financial matters and court should not interfere. That's a very, very strong statement made by the Honorable Supreme Court. Now, I have 2 comments to make in addition to what Mr. Tamal Bandyopadhyay has said. Banks and financial institutions will need a very soft lending. No, you can't do ups and downs. You can't say that, okay, for 9 months don't recover and 10 months don't recover and then straight away recover in 10 days' time. So that's not fair. So RBI should consider giving them longer time. It may be a time of maybe 180 days to 270, because the fact remains that COVID is not over. We may feel COVID is over, but COVID is not over. And some of the sectors of the economy have been affected so badly that they will take quite some time to recover. So therefore, RBI should consider giving a lending space to all financial institutions by giving them longer time to declare NPAs, which should gradually reduce, and maybe by March 2023, it should come to 90 days. That's one area. Secondly, they should give 2-year tenure to every loan, extended repayment time for 2 years, and banks should be able to restructure by a variable EMI amount. As the economy grows, the customer should be able to pay up. Now, unless we do these 2 things, there will be a huge problem in the banking sector. And bank, I include NBFCs as well. So they would have a huge problem, and that will ultimately affect the economy because they will not be having enough money to lend. So I think what has come out is very well, but then financial institutions will need a soft lending space, which has to come only from the Reserve Bank of India.
On with us, let me also take it across for consulting editor Bharti Airtel. Hi, Bharti, good morning. My colleague from the Supreme Court is telling us that this is, of course, a big relief coming in from for the banking system. The Apex Court has said that it is not for them to decide on economic policy. This is best left to the domain of the RBI as well as the government. The government would be, of course, breathing a sigh of relief as well, now that the Supreme Court has said that they will not be entering into this issue of providing relief to the common man. I want to understand from you, how big a relief do you think is it for the banking system?
Thank you said, the admission by the court that the court really doesn't have the expertise to decide on financial and commercial matters. I just wish this realization had come to the judges, the honorable judges, I must say, for fear of contempt of court. I wish this realization had come to them a little earlier, because we lost close to a year in a completely unnecessary wrangle of taking matters that are purely between banks and borrowers to the courts. So had this happened, had the court, in fact, they should have thrown it out in the first place. If they didn't do that, then they should have dismissed it completely initially at the first hearing. So this is really a welcome, realization by the court. I just wish this realization extended a little further, and the court had not held that applying interest on interest is a penalty. That is just the way commercial banking works. And as I said, the same logic of the court admission that they do not have the expertise should have been extended to this, and they should not have interfered in the matter of interest on interest also. That is how commercial practice is, not only in India, all over the world. Hopefully, with this admission that the courts do not have the expertise, the court will not in future entertain similar pleas. This is an absolutely ridiculous case where the borrowers try to pressurize the courts by, the way it is, you hire very smart lawyers who put your case and make a very convincing case, quote unquote, and the court unnecessarily got into something that was just not their business at all. Hopefully, this is curtains down on all similar transactions and pleas in future.
Let me also take it across to my colleague Abhimanyu Sharma as well. He's been giving us all these important flashes coming in from the Apex Port. Abhimanyu, it's of course a big relief. You heard the experts out there. Tell us what the Apex Port today said. They also referred to the fact that they do not have the economic expertise in this matter, and which is why it's best left to the government and the RBI to decide on the way forward.
While the top court made it clear that the court and judges do not have the expertise to delve into financial matters, and stated it extremely clearly that it was best left for the government and RBI to decide on economic policy and for the court not to intervene. However, the court also held that the kind of relief which was offered to borrowers of loans lower than rupees 2 crores, which was selectively offered by the union government, there was no rationale for the selectivity. So that relief has been extended by means of waiver of compound interest for all borrowers, including those exceeding rupees 2 crores for the period during loan moratorium. And also, banks and financial institutions have been asked to refund and adjust the penal interest, which already has been collected from all borrowers for the period during the moratorium. However, this may come as a relief, but on the other end, the Supreme Court's oral dictated order is not yet clear on the fact whether the stay on classifying of NPAs by banks has been lifted or not, because that is something which is going to have a huge impact on defaults by various companies, though the Supreme Court order today will come as some degree of relief for various companies, including those who are on the verge of default. But as soon as the stay, which will be lifted by the Supreme Court, as and when the order copy of the Supreme Court order comes, there will be more clarity on that. That is, of course, going to have a huge bearing on the fact whether more companies will go into default or more loan restructuring will be offered by banks. So clearly, it is within the purview and domain of banks and financial institutions, and also concerned with RBI to a certain extent. But still, there is ample clarity on this issue. It cannot be categorically stated whether the Supreme Court order only comes as a relief for companies and whether there is no setback for them as of now.
Well, what is your reading from the details that we have got so far? What is your reading? Has the lifting of the classification of NPAs, has that also been lifted, or will we continue with the present system where banks are basically declaring actual NPAs as well as pro forma NPAs? What is your reading of the judgment, whatever details we have got so far? Mr. Kumar?
Yes. Yeah.
Mr. Kumar, can you hear me? Mr. Rajneesh Kumar, that was directed to you.
Yeah. Yeah.
I'm afraid, I think we've got Mr. Kumar on a bad line. Yes, Mr. Kumar. My question to you was that what is your interpretation based on the details that we received so far? What is the position as far as classification of NPAs is concerned? Has that also been removed, and will banks now give us the actual NPA number, or will they have to continue to declare pro forma NPAs and NPAs as per the books?
No, they will declare the actual numbers because pro forma NPA was being declared because there was a stay from the Supreme Court. So now with this judgment, the decks have been cleared and the March balance sheet of all the banks will reflect the correct NPA position, and there's no question of declaring any pro forma NPAs.
Number be somewhere close to the RBI's baseline number, or the upper end of the band of close to about 15%, I think was what the RBI's last report said in terms of NPAs of the banking system. So we'll be close to the baseline. I think that was something around about 11 or 12%, and at the end of the band it was close to 14%.
No, RBI numbers are their assessment of the situation in various scenarios. That is not the actual number. We have the pro forma number of all the banks for December quarter. And March quarter, I don't think that there is going to be any major slippages as a result of this Supreme Court judgment. And I'm not expecting that there would be a very elevated level of NPAs in March quarter. I'm going by the numbers which were declared in December and the current assessment of the situation.
Also welcoming the Supreme Court's admission that the court really doesn't have the expertise to go into matters of, economics and finance, etc. But are you a little intrigued that this does not extend to the levy of interest on interest, because that is a normal banking practice? And is this an unfortunate development, or do you think banks have learned to live with it?
No, that's not a Supreme Court order in the sense that this was the submissions or the relief which was given when the court proceedings were on. And that position has been accepted. The demand was that interest should be waived. And Supreme Court, the arguments by the banking industry, Indian Bankers Association, government, RBI was that this is not possible. Banks are intermediaries. They earn interest and they pay interest to depositors. If they are unable to recover interest on the loans, then how do they pay the interest to the depositors? So that issue has been settled, and because the government had agreed and submitted to the court that the interest on interest would be borne by the government. There is no waiver in that sense. This is a relief to the borrowers, but the cost has been borne by the government of India. And that's all right, because as a part of the relief package, if government says that I am giving this relief, that is different. The issue was whether banks should waive interest or whether banks should waive interest on interest. So I'm happy that Supreme Court has given due consideration to this point of view of the banks and their submission, that waiver of interest or even waiver of interest on interest that banks cannot give. But government, if they want to give any relief to anybody through the budgetary provisions, so nobody can question that.
The government's domain, but the Supreme Court also seems to have queried that why should this waiver or the government's willingness to bear interest on interest be limited only to certain accounts and certain sectors? Does that seem to be once again a case of the Supreme Court transgressing its own domain?
Yeah, but I would not like to comment on that. Now the judgment is out. And Supreme Court themselves have also said that we don't have economic expertise and it is for the Government and Reserve Bank of India to decide. And that is what precisely the government and the Reserve Bank of India and even the banks were doing, that realizing the gravity of the situation. There was a calibrated response. Time to time measures were announced. It's not that Reserve Bank of India or the government or the banks were not aware of the situation and the impact of the lockdown on everyone, businesses, individuals. And reliefs were given. The response was very calibrated and according to the developing situation. So I think Supreme Court themselves have said that in this matter now they would not like to, make any decision or give any direction.
Absolutely. Thank you so much, Mr. Rajesh Kumar and Tamal, for joining us. I think everybody's wishes, if only the Supreme Court had come to this realization earlier, maybe the country and the economy would have been saved a great deal of time, energy, effort, etc. But with that, it's time for us to slip into a very short break, but please do stay with us.
You're still watching Buy Now, Sell Now right here on ET Now. And before we proceed further with the show, let's pull up the Buy Now, Sell Now stock cloud real quick to give you a sense of all the individual stocks you need to keep on your watch list. Of course, banking stocks are definitely the ones that are being much talked about and discussed on the back of the Supreme Court verdict on loan moratorium. But there are a few more names that you could be keeping an eye out for. Starting with Maruti Suzuki, they've announced one more price hike with effect from 1st of April because of high raw material costs, and that is something that they're now finally looking to pass on to the customers as well. Varroc Engineering, another name from Motown that's in focus. They've approved a QIP with a floor price of 395 rupees a piece. Street doesn't seem too enthused about that, however. There's KEC International in focus on back of order win worth 1,400 crores. Edelweiss, another name to watch out for from the broader market. They've announced strategic investment by PAG in Edelweiss's wealth management arm. Adani Ports, meanwhile, looking to buy 58% stake in Gangavaram Port for around 3,600 crores. There's Mahindra CIE, which is in fact with Sunbank for sourcing green energy, another stock to watch out for. You also have some brokerage updates coming in and views coming in rather. HDFC Bank, Jefferies has maintained a buy with a target of 1860 rupees a piece. Retail business indicates momentum on client acquisition, also seems buoyant. Innocent Bank, another name from the banking space to watch out for. CS, that's Credit Suisse, has maintained an outperformed stance with a target of 980 per share. Tata Motors, CLSA maintains a buy, target at 425. And finally, you have JP Morgan coming out with a note on HUL. They continue to be optimistic and overweight with a target of 2,550. Let's touch base with our guests on the show, Kunal Bothra as well as Rajesh Agarwal. Kunal, coming to you first for your trading ideas for the day.
So, Karnya, two buy calls for the day, expecting the bank Nifty and the banking stocks specifically to do pretty well, especially after the judgment from Supreme Court, and we've seen some renewed fervor into many of the banking stocks. So, two buy calls. First one, a buy on PNB, the stock coming back above its 50-day moving average, or just at touching distance of breaking past about 50 DMA. I believe the stock has already done pretty well for itself. It's been cruising above the 200-day moving average for quite some time in the last 4-5 months of the market recovery as well. So would suggest a buy on PNB for a target of approximately 44.45. Stop loss could be kept at 36 levels. The second stock is again from the banking pack, but it's a buy on IDFC First Bank. From 68 or 69 rupees, the stock had already gone through a correction in last 2 weeks. Corrected to 57, 58 levels, and now it's bouncing back again. So this zone of 57 for IDFC First Bank seems to be a good support for the stock. So keeping that as a stop loss, would suggest a buy for a target of approximately 68.
All right, both banking counters to focus on from Kunal. Rajesh, coming to you on your high risk and low risk ideas. What do you have for us?
Good morning, Alex. We will go with Apollo Hospital, the first idea. After seeing a recent correction of around 10%, the valuations are quite reasonable at this point of time, with 70 hospitals, 10,200 beds, 7,800 pharmacies. We believe that this stock in the hospital sector, in the medical sector, is going to do very well, although it has done very well in the recent past, but still a lot of steam is left. After this COVID thing, people are more into medical tourism has started. There was no occupancy due to COVID in the past quarters or so, but going forward, we think we see things improving. In the pharmacy businesses, seeing high growth, and they are expanding in the margins. We believe that with a target of 3,200 in the next 1 quarter or so, this stock can be bought. And the other one will be graphite, with a medium-term target of 550, medium-term target of 550, and a longer-term target of 600 rupees. This is one of the largest Indian producer of graphite electrodes by capacity. They have a capacity of 98,000 tons spread over 4 plants, 3 in India and 1 in Germany. Now, this graphite electrode is used in EAF route of steel making, for which they have clients like SR Steel, SRC, Tesco, etc. The capacity utilization as a recovery in steel is a big positive for graphite electrode sector as such, and the valuations are attractive. We believe that this stock can do very well. We have a long-term target of 600 rupees in the stock. But for a short-term time horizon, maybe 1 quarter or so, 550 would be a reasonable target.
Okay, all right. Well, that's the top ideas from a fundamental as well as technical standpoint from both Kunal and Rajesh for this morning. Let's touch base with our viewer queries then. Deepak Jadhav has written to us. He's got 3 lakh shares of Vodafone Idea. The buying price was 3.8 rupees a piece. He wants to understand if it's a good idea, it's a prudent call to hold on to it for a long term, or should he exit? Rajesh, I'll stick with you for this one since the time horizon is a long, he's looking for the long haul. Can you tell us what is your assessment of the fundamentals of a Vodafone Idea? Is it a good idea to stay put?
See, Karunya, talking about fundamentals at this point of time in Vodafone is a very tough job. What I would suggest is, since its buying price is 300.8 rupees, what I would suggest is book part of your profits, like you sell around 1,20,000 shares, so that at least whatever you have invested, that comes back, and the rest is almost free. Now, coming to the company as such, the numbers are likely to improve going forward because they have one, fundraising plans. 2, tariff hike is just a matter of time. It's just because of Jio announcing new tariff plans that the tariff hike has been postponed. Debt is an issue, but once fundraising is being done, I think that can be taken over a long period of time. So, if things improve on the debt side and they successfully go for a tariff hike, I think there can be a further upside from this. But to safeguard your investment, I would say book part profit so that your rest of the investment becomes almost free.
All right, let's take another query. Kunal, this is a short-term query, and this one's from Mahesh Kumar. This is on Antony Waste, and he's bought 65 shares at 309 per share. He's asking whether to hold or sell.
Comment, Alex. I'm unfortunate I don't track the stock.
Okay, fair enough. I'll very quickly then. Okay, can I come to you on Deepak Nitrite then? Deepak Nitrite, we've got Chintaharan, who's bought 123 shares off the counter at 1,593. Of course, his holding period is long, but what's the technical view?
I think post the inclusion in FNO, Deepak Nitrite has done exceptionally well. It just continued to move up higher. If I'm not wrong, this is the 7th or the 8th straight quarter where you've seen some very strong price gains for the stock. So it's a stock which looks extremely strong and attractive from a longer term perspective. The only catch is that you have to have a buy and dip strategy for such kind of themes, the ones which have already done so well in the last 8-9 quarters. So I think a buy and dip strategy is a good strategy for Deepak Nitrite.
All right. What's your view, Rajesh? Fundamentally, how is it positioned vis-a-vis the rest of the agrochemical players? Do you think it's a good idea to stay put?
Deepak Nitrite or Antony Waste?
Deepak Nitrite first.
Okay. See, the stock, as Kunal said, has done exceptionally well, and we believe that it's going to outperform in the next 2 years time horizon also, because we believe that with a portfolio of 100 products, recently commissioned 1,400 crore petchem plant, and demand across segment, mainly from dyes and intermediaries, the numbers are going to be good. Q3 was better than Q2, and we believe that Q4 would be even better than Q3. The margins have improved from 25% to 28% margins for phenolics, and basic chemicals are going to do well. We have a buy rating on this stock from very long period of time, maybe from 3 odd figure, but still we have recommended clients to buy this stock on every day. So we have a long-term target of maybe 1900 odd rupees in the next 6 months. So one can buy on every day.
Rajesh, thank you so much. Thank you as well, Kunal, for sharing your views. We're heading into a break, but do stay tuned. Lots more on the other side. Welcome back. You're watching Buy Now, Sell Now. Maruti Suzuki, one of the stocks in the auto pack, in focus, gaining about 1% in trade as of now. The stock is in focus because the company has said that it's going to undertake a price hike in April on account of input prices. In an exclusive conversation with Executive Director Shashank Srivastav, he says that the price surge will continue in the upcoming quarters, and he also added that regulatory changes and raw material costs have increased costs for the company as well. Here's an excerpt of that conversation.
Regarding the price hike, as you recall, we had the conversion from BS4 to BS6 emission regulation, as also some safety regulations which were put in place last year in April 2020 and October 2019. So that involved a lot of costs and investment from the OEMs, including Maruti Suzuki. And we thought we would pass on this price in this year, 2021. Unfortunately, we had the unprecedented situation of the pandemic, and the first few quarters, the demand, because of the collapse of demand, we actually thought that we cannot increase the price at that time. However, in January this year, we had to take a small price hike, roughly about 1.3%. The reason for that was that apart from the regulatory cost increase because of the regulatory changes, we also had a huge increase in the raw material costs: steel, plastics, rubber, copper, precious metals like palladium, rhodium, steel, and all of that. So we could not, we could not but increase the price in January. But
watching Buy Now, Sell Now. It's time to unveil our daily quiz questions answer. We asked you this morning which sectors poised to see the highest expenditure by the government over the next 5 years under the National Infra Pipeline. The options were energy, irrigation, railways and industrial infra. The correct answer is option B, that's energy, and we have just one quiz champion today. His name is Suresh Sharma. Congratulations, and thank you for all our viewers for participating on a daily basis.
All right, well, on that note, thank you so much for watching Buy Now, Sell Now. Up next is Markets at 12, so do stay tuned. This is ET.